I don't expect everybody to become a master options trader, but we're sure going to give it a shot.
And there's something so great about being able to talk about it because you take in the information. I always find that I take in the information, I understand the theory, I'm like, I got this. And then you set up the trade. And then as you're setting it up, you realize that you have a couple of like little tiny, more nuanced questions.
Mm-hmm.
And then you resolve the trade. And then you're like, oh, now I got it. Yep, got it.
Yes.
And then now you're off and running. And it's so great to have an environment where you're able to like talk it out with people and other people's questions you maybe didn't realize you had. And then, or they ask you a question, then you answer it. You're like, oh, I didn't know I knew that. And it's so great when you have that community aspect where you're all just like focusing on that. Nobody's like running off to go pick up their kids or whatever. We're all just still talking about it and how and processing how this information is affecting our lives. Because every time my earning potential increases, I also then have to grow my psychology to accept that.
Very nicely said.
It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello, everybody. It's Tyrone Jackson, the wealthy investor, and welcome back to another episode of Trading Stocks Made Easy. You know, it's interesting because you can also listen to this podcast on YouTube. And when the show is posted on YouTube, I actually respond. Like, I really respond to people. And one of my favorite responses to an episode we posted not too long ago, someone says, Tyrone's really a good guy, but trading stocks is not really as easy as he makes it sound. And I get that from time to time because in the marketplace these days, apparently you have a choice in who you choose to study with when it comes to stock market trading. So really, trading is really not that difficult. Or as a friend of mine says, nothing is that difficult when you know how. And today's show, we're going to wind up talking about non-directional trading. In other words, most people rely on stocks rising in order to make their money. Or there are some traders that do really well when the market is actually declining. But what would happen if your skill set were actually developed to the degree that you really didn't need a direction? You just needed the market to exist in order to make bags and bags of money. Well, that's what we're going to talk about here on the Trading Stocks Made Easy podcast. That means if I am going to help educate you today, you have to do what? You have to keep an open mind, an open heart, and get ready to learn something really fantastic when we come back.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back. Today, we're talking about making money regardless of the direction of the market or a particular index. And I have someone who's been on the show multiple times. And if you watch the Trading Stocks Made Easy podcast on YouTube, you may recognize this next guest. This woman is an actress, like really an actress, a producer, a director, a writer, a lighting designer. She does everything, whatever's required of her, and a voiceover person. Welcome back to Trading Stocks Made Easy, Carrie Kiernan. How are you?
I'm great, Tyrone. Thank you for that.
I try to give you a pretty snazzy setup. I think
yeah,
you
well,
deserve
a lighting designer. I'm not sure I can fulfill that one, but everything else, you sign me up. Sign me up.
You know, it's funny. I've been reading some of the comments because we actually post on YouTube, right? So I've been reading some of the comments, and people say, "Yeah, he has a lot of people from the entertainment business in his program," and that is actually true. But here's the difference: I have people from the entertainment business who actually make their living entertaining. And now you're not just an actress, you're also a producer and a director. Like for real, you get paid for this, right?
Yes, 100%. Yes. Over the last 4 years, I have started directing more often than acting, and I've been directing voiceovers for 4 years. And a lot of times, I'm directing the English language version of foreign language content for different distributors like Netflix or other like animation places. So I also do adaptations and writing and directed plays and have been nominated for comedy direction and won some awards for comedy direction. And so it's really just evolved into like many, many different aspects. And it's amazing to be able to continue to get paid to be creative in all these different categories.
Now, can I tell you what's really interesting about you? You must be very good at what you do, because some of the clients who you deliver this product to, companies like Netflix, they love you, right?
Yes.
Yeah.
Yes.
So you're who knows where you'll be in the next year or two.
I mean, who knows? But all I do is work so I can fund my account, because that's where my real future is.
And I was going to say, you probably won't even take my phone call in 2 years.
Oh, for sure I will. I'll still be in your class in 2 years. The market will still exist, and it'll be constantly changing.
Right. Now let me tell you why I love having you here. You are one of those rare people who probably never thought that they'd be, making consistent money trading. But you are always, your mindset is so great and you absorb material so well. So just before we talk about some of the trades you put on and all that, tell us about, if I were to ask you for 3 skills that you feel like you've acquired as a stock market trader over the last 2 to 5 years, what would they be?
Patience, discipline, and openness. Patient, because I think that at the beginning there's this feeling of like, oh my God, I have to do this, or I have to put on the trade, I have to take care of this, I have to make the money, I have to, there's like this rush that I think for me comes from this lack of trust of the future, and you feel like, well, this is happening right now and I got to do it right now and I got to get it right now. Well, now's my chance. And you're like, oh, and over time you start to realize there's always another call 30 days out, no matter what happens in the market. And then in terms of discipline, it really is about following the rules, just literally following the discipline. And it sounds so crazy to be like, well, you learn a system, so obviously you follow the system. But it's weird how greed or doubt or fear or whatever can kind of sneak in there inside your thinking and sort of throw you off your game or make you not fully trusted or whatever. And I think that over time, I've just been like, no, just do the discipline, and who cares about the emotion? You're fine tomorrow. And then openness really has to do with me managing my own wealth beliefs and my own mental state, and just that journey and understanding that journey is just going to evolve over time. It's never going to go away. You're never going to stop. Your mind is always going to be present. You're always going to have emotions. You're always going to have a life that's going on alongside your trading. But this idea of just staying open so that you're not getting all like clouded up by that stuff, and really just trusting that, these little beliefs or these little like fears or worries or whatever might kind of creep in. The shadow of them will start to creep in a little bit here and there still, but you're like, oh, no, that's not a big deal. And I think just time has really shown me like just to relax.
Now, what initially attracted you to stock market trading and investing?
For me, I needed to find a way for my money to make money for me, to work harder for me, because I wanted more dominion over my financial future and not have to worry about whether or not I booked my next job.
Okay, so you were looking, essentially, if there was a way to have some passive income doing something you thought really good. Now, what's really interesting is your level of comprehension. Like when I throw out a new system or the market changes and it's time to have a variation on what we've traditionally done, you seem to be able to adapt pretty quickly, process and then adapt. Have you always been that way?
I've always been good. In general, I've always been good at learning process and adapting and integrating like new information. However, I will say that I definitely struggled at the beginning when, you would learn one thing and like, this is the way to trade. This is the answer to the drill, and this is the way to trade, and this is the way to place a trade right now. And then 3 months later, it's like, nope, that's not the answer anymore. And you're like, what changed? You're like, well, the market changed. So it was, I think I was like too caught up in like, this is how it is. And I was like, oh, wait, no, in this market, it's actually this. Oh, wait, no, in this market, it's actually this. And so I learned really quickly that, oh, you have to be flexible and you have to kind of keep taking in this extra variable that is, well, what are the market conditions? What are the market conditions? What are the market conditions?
Now, have you always been a person who was good at math? Because a lot of people, they say, I would love to trade on my own, but like I've never been that good at math.
I mean, I'm not great at like high level math, but basically like we're just doing like addition and subtraction. So yeah, I can do that.
I always say stock market trading is really fourth grade math because you're adding and subtracting, right? As you move up the scale, it's a little bit different.
Well, I mean, I think at some point when you start to try and understand concepts, you have to start to understand like percentages or, like a little bit more, but still it's just the math. You just have to do the math, and the math is pretty simple. And so, but I was never super intimidated by math, but I can't tell you how many of my friends I brought into this program who it has freaked them out. I've had to like sit down and be like, it's fine. It's just adding and subtracting. It's just adding and subtracting. But they get nervous because it's a new concept and they think it's more complicated. You're like, no, just subtract this bid from that price. It's fine. Just subtract it. Easy.
Right. If you're trading a stock and you're buying the shares at, let's say, the $59, you're going to sell the 60 strike call. You're going to take in the premium plus $1 if called out, right?
Yep.
And that $1, depending upon the amount of shares you have, that could be a $500 trade, a $1,000 trade, a $1,500 trade. So that part of it was not hard for you, right? Calculating what we call the cap gains part of the trade.
Yeah, no, but I absolutely not. It was not a problem. But also, we don't focus on the capital gains part of the trade. We focus on the guaranteed money of the trade. And I think that's what can confuse people sometimes, is they get so caught up in the cap gain side of it. I'm like, hold on. Tomorrow, you just get this guaranteed money. And we're focused on guaranteed money when we're focusing on our target and then if we get cap gains, that's great 30 days from now. But right now, we're focusing on guaranteed income and being on target for that.
Yes. Now, you keep mentioning the term target, and some of our listeners don't know what that means. There's actually a way, depending upon how you allocate your funds, there's a way to, generally speaking, in a rising market, get a predictable amount of money, predictable rate of return every single month in your account. So as you move up the scale in the Wealthy Investor Program, we have like income targets, right? So that's what Carrie's referring to. But Carrie, your confidence has grown such that you manage your money and you manage money for your parents, right?
Yes.
Do you ever feel any pressure around that?
I did at first. I was like, oh my gosh, because my account, something happens. I'm like, no problem. I know like time is fine. But for my parents, I'm like, oh my gosh, no. If they looked at the account right now, they would see that it was down $200, but that's just today. Like, I think I had a lot more pressure for them, but they're very, very comfortable with me and they're very confident in me. And now it's been so many years that they're like, oh, actually, we're down in our other account that's being managed in our mutual fund, and we're up in your account. And I'm like, yeah, you are.
So have you ever thought about becoming a professional money manager now?
No. I love my job.
Okay.
I know we focus on residual income, and obviously that's what I'm trying to build, but I'm really lucky that I genuinely love the job that I do that takes up my time in the day that I earn my money doing. So I love it.
Right. And we're going to talk about this idea of non-directional trading. No matter where the market goes, there's an income stream. But yes. I think it is amazing the skill set that you've developed and the mindset that you've cultivated. What has surprised you most about this new skill as a stock market trader that you have acquired? Have you shocked yourself or blown your mind in any way?
I mean, just the fact that I am able to make money in the stock market consistently is insane to me. Like, I just never, and sometimes I kind of forget until I start to like talk to other people and I'm like, oh yeah, I do this thing. And they stare at me, they gave me that face. And I was like, oh, that's right. People don't know this. People don't know what I know. Oh, that's right. It's not, because it's so second nature to me now. And I literally cannot remember who I was and how I thought before I had this information and this education.
Right. That's funny. And I'll share with you something that's really interesting. Like, I had no idea I'd grow up to be the wealthy investor, right? Because that was just a mystical world. And that's, why I emphasize so much this idea of keeping an open mind, because you never know where you'll be in your life. And life is really fantastic that way. That you and I are both in this world, and we had no idea as kids or teenagers or young adults that, we'd ultimately be trading for, thousands of dollars, right?
Tyrone, it's so funny that you say that, because I remember at the very beginning, and I talked about this a lot in my first year, was the wealth belief. The thing that has surprised me the most is discovering that I'm still who I am and have all my same values now that I'm making money in the stock market. And making money has not suddenly changed me into some greedy, awful, terrible, non-empathetic person. And the idea of being able to stay who I am, and really all the money has done is amplify the qualities I already had. So now I can just be more generous or more compassionate or more kind or more joyful.
And I'm happy that you brought that up, because a lot of people feel that, there's this inherent money belief that people who make a lot of money are angry and they're terrible and they're just, trying to take advantage of other people. And money does just, in fact, amplify who you are. It's like a sense of humor. Like, I've met people in my life that have these great sense of humor, and they can use that sense of humor as a weapon to hurt other people and make them feel small, right? And then there are other people who can use that sense of humor to light up a room and help people feel welcome. And that's the same thing that I have found with money. It only takes who you really are in essence and blows it up. So if you want to use money to try to crush people in a negative way, then you use that tool in that way. But you can also use money to give it away and help other people and bring positive energy into that world. So I love that you have found that to be your experience.
Yeah, I was really worried. I was like, what if I turn into a terrible person? I was like, it turns out I'm not a terrible person, which is nice to know.
Right. It is. The money's revealed who you really are. Is that right?
Yes, exactly.
Yeah. One other question before we get into direction about lifestyle. There are certain trades that you have learned to do. We call them volatility trades. They're best placed at 3:45, 15 minutes before the market actually closes. And is that baked into your lifestyle? Are you a volatility trader?
No, absolutely not. I oftentimes, unfortunately for me, my lunch is at 1:00. So if I'm working and I'm in the studio, I am not available at 12:45 to place those trades, or I have to take a really quick break, and I don't like to rush when I'm trading, even if I already decided what I'm going to do. Sometimes it just doesn't, I don't like the feel of that. But also most of the time I'm hitting my targets and I'm making my money without having to worry about volatility trading specifically. So it's just a tool that's there. I've used it at times in my trading, but generally speaking, it is not one of my forefronts.
Okay. Could you, so in other words, with covered call writing, right, you're able to do that whenever the market is open, you see your premium, you set up your trades, so on and so forth, right?
Yeah, and then and it's so much easier, and the bids are beefy enough that I make enough, I hit my targets, and it's less stressful, and I just let it play out, and it's all automated, and I just don't have the time to be on top of the market in the same way that some people can, and I just like to be able to trade, hit my targets, and live my life.
Ooh, I like the sound of that. Trade, hit my targets, and live my life. That's the name of my first CD, by the way. Hitting Amazon any day now.
Oh, great. I can't wait.
Love songs and other stories. Okay, so let's get into this idea that I am so proud of with you. You have almost mastered being able to hit an income target, whether stocks are rising or declining. Rising being a bull market, declining being a bear market, right? So you're one of those rare people that can make money no matter where the market is going. How did you arrive at that skill set?
Well, first the answer is time. Really using the discipline over time and seeing the different market conditions. And a lot of it is trusting that it's going to be okay. Like trusting in the future was the really, really big challenge for me.
Mm-hmm.
You're like, it's at its 52-week high. I'm like, it couldn't possibly go higher. And you're like, oh, it did go higher. Okay, cool. I think I've also always been prone to like, what if it drops? What if everything, what is a pullback? What if there's a pullback? And so early on in my trading, I was much more heavily trading in the money calls than out of the money calls, which I think is the opposite of a lot of people I see in the program.
Yes.
They often come in focusing on that out of the money call and that capital gain. And for me, I was like, no, in the money, because I want to be back in a capital position. And I'm making enough money. You calculate it. I'm still making money. I'm still hitting my targets, but I'm more likely to go back into a capital position. And so I think that's so I already was prone to sort of understanding and expecting and being prepared for pullbacks and really protecting and hedging for that. And then you start to watch the market over time and you're like, oh, here's a pullback and there's the retracement. And now we're range bound. Oh, pullback, retracement, range bound, bull. And you start to go, oh, this is just, there's really only 4 choices. And if you know how to trade in any of those 4 choices, and then you just see, it's very obvious when you're in that market and you just place that trade and then you keep making your money.
Yes. Now, one of the reasons that this is so easy is because we have our portfolio so tightly allocated to Dow stocks, right? So,
Yes.
Disney, a member of the Dow Jones Industrial Average and the S&P 500, it's probably never going to $5 or $6 a share, especially
No.
not at the time of this recording, right? So that means that the institutions are trading the shares. When there's a pullback in the market, some of them stop out using stop losses. And for us, that is a golden opportunity if we believe ultimately that the stock will retrace. It'll rise again. Now, we've had a number of discussions, but I think, and you tell our audience, one of the reasons that you're able to make money regardless of direction is because of spreads.
Yes,
Is that
absolutely.
accurate?
100%. That's yes.
Okay.
That's the only way you can do it.
Right. Because if you're just covered call writing, you're missing a tool from your toolbox when the market pulls back. So just tell us how you like to set up spreads. And are you setting up spreads on dividend-paying stocks or non-dividend-paying stocks? What's your approach?
Oh, for me right now, absolutely dividend-paying stocks, for sure. There was another market condition where I was setting up some spreads on one stock that was a growth stock that didn't pay a dividend. But now, absolutely, only dividend-paying stocks. And I love it because it's a way that the market will tell you whether or not it's time to go back into that stock. And if you do get triggered in, you're like, great, awesome, it's on the up, I've caught it, I'm good, we're happy. And if you don't get triggered in, you're like, no problem, I will wait for you. I'm going to be patient over here and not tie up a ton of my capital and not get my account value dropped down and not tie up my margin. And you let me know when you're ready to rise.
Right. So a spread allows you to take in income similar to a covered call without initially owning the shares. So
Correct.
There's a bear call spread, and then there's a calendar spread. Which ones do you favor?
I'm heavy into the bear call spread. I really like the bear call spread. I like the way that the math works out for it. I like the way that you set it up. I have personally found that sometimes in a calendar spread, you might have to be closer to the current stock price. And so if you do have like a pop and drop, you could get triggered into cover, but then it actually dropped. But in a bear call spread, you can set it up. The math works out, so you can set it up a little bit further away from out of the money. So that way, really, by the time you get triggered in, they're definitely back in the stock. So it's a better marker for me.
Yes, and when you say they, and I know exactly what you mean. I just am trying to keep the audience in. We recognize
Yes.
that we are guppies, right? And we're trading in the stock market against institutions. So it's the institutions that really move the stock. Why? Because they're buying 2, 3, 4, 5 million shares at a pop, and they're the ones that really make the market go up and down. So Carrie, when you're saying when they're back, you're referring to the institutions, right?
Oh, yes, absolutely.
Yeah.
I have no ego. I don't need it to be about me. I don't need to find the next best thing and, ooh, I got to be right about this thing. I was like, I care about what Wall Street is trading. And if they're in the stock, I'm in the stock. And if they're not, I'm not. And I don't really need to like prove anything.
So do you have a preference of dividend paying stocks versus non-dividend paying stocks as it relates to spreads?
I do, especially in this market, for sure, I do. The dividend-paying stocks, generally speaking, a non-dividend-paying stock, I have discovered in my experience that it can like go up and then also go down faster. So there could be a situation where you get triggered in, but then it also goes back down, which isn't really a problem because then you're just in a covered call and the bids are still there and they're healthy and I'm still making money on that. However, in a dividend-paying stock, I've noticed that if it is retracing and going up, it's pretty much just going up. Like it might come back down like $2 or something, but it's not going to jump $17 and then drop $15. Like that's not what a dividend paying stock is doing in this current market. So it's just a better marker for the conviction of the Wall Street in that particular security.
Correct. Now, whenever I'm trading, I am very aware of float size. Do you look at the float as an indication of future volatility, or that's just not a tool that you rely on?
I mean, I really am just looking at the behavior over, I'm really looking more at like the last 30, 60, and 90 days and working off that chart and like what the daily volatility has been. And then I use the float to sort of understand that if it has a huge float and it's moving that much, well, that's a ton of conviction. Mm-hmm. And it has a smaller float and it's moving that much. You're like, okay, that's a little bit different. And obviously, the smaller the float, the easier it is to rise. But I just find that a lot of the stocks I'm paying that are dividend paying, Dow stocks, they tend to have larger floats.
Yes, they do. And that takes you back to the Dow and the S&P and all that jazz.
Yeah.
Have you ever bought a stock below $10?
No, never. Are you kidding me? I don't like to trade anything under $50. I don't like to trade anything under $75. Like, because the way that they behave towards cheaper stocks, like I feel like they're always the first to exit those, and they're more likely to keep a stock that's at $80 or $90 and I don't want to play that game. I don't need to buy low to feel like, oh my God, I got it at 10 and now it's at 90. I'm like, I'll buy it at 100 and now it's at 250. Like that's my game.
And also, I think it's we're getting into a version of trader talk here, but I think it's really interesting because the institutional involvement in shares under $10 is generally not there. So you don't get to ride their coattails, and you cannot sell covered calls. So, so you miss out on guaranteed income, and you're not riding along with the big boys and girls, And
let's face it, I feel like that I have friends, and I feel like they're like, yeah, I bought this, but I was able to get they'll spend like $4,000 buying, hundreds of shares of something. I'm like, you could have just bought way less shares but gotten Visa.
Yeah.
For $4,000, you can get several shares of more than 2 shares of Visa, let me tell you. And that stock is rising and institutions like it and we understand future revenue and you know what I mean? Like, so I've never been, but I'm not a speculator. I'm not that person that's just not my psychology. I've never been the person who's like, I'm going to get the next best thing. I'm like, no. I'm cool with like the established awesome thing and just riding that.
Yes. And it's also interesting that you can't set up spreads on stocks under $10 because the option volume is simply just not there. So it's like you're actually exposing yourself to more risk, right? Yes. And less ways to protect your money.
Yeah, because even a stock that's like, even if there's a stock that's like kissing like $40 or $50 or whatever, if that stock drops $10, you are not going to see those out of the money bids far enough out to set up a spread even on those. Often. Correct.
So you have a methodology that you have found and you really like, right?
Yeah.
Okay.
Yeah.
So we're going to talk to you a little bit more about your practices and your habits on the other side of this commercial, okay?
Mm-hmm.
Back in a moment with more trader talk and non-directional trading right after you take a listen to this.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Hey, it's Tyrone Jackson, and welcome back to more Trading Stocks Made Easy. You know, today's episode about non-directional trading sounds a little bit more like trader talk, two traders who discuss their philosophies, but I hope that it's informing you and inspiring you. And today I'm here with actress, writer, producer, director, seamstress, marketeer, Carrie Kiernan. So, Carrie, we were talking about some of your habits, right? Because I think a lot of people enter the stock market and they see it as it's almost like the lottery to them. I bought this thing at 7 and it's on its way to 700. Instead of seeking to be consistent, right? So It sounds like you are consistent in what you trade, mostly Dow and S&P 100, and stocks that are above $50, above $100. What's your favor there?
So for me, I like to trade stocks that are over $90. I really like to trade stocks that are between like 95 and like 125. Like those are great, but I will not trade a stock that's under $75.
Okay, and why is that?
Because in my experience as I was growing, now I will also say when I was growing my accounts, I think I was in more growth stocks because I was trying to get like beefier bids and I was trying to like build my account faster and that worked out fine. But there were also times where those non-dividend paying and they were priced lower, and I just found that in pullbacks, they're the first ones that Wall Street leaves. You know? And so I just realized that there's always that chance of like, and then you're like, okay, now I just have to keep trading at my cost basis or whatever. So I just found that for me, I'm more comfortable. The bids stay more consistent. Even if the stock drops like $7, $10, you can still get more than $1 30 days out. Those out of the money, the volatility and the bid beefiness in the out of the money calls stay nice and beefy, so you can still be consistent in the amount you're bringing in. And if those bids really change, if the stock price changes, then it's harder to be consistent. And for me, consistency is key.
Very nicely said. Now, I've been also trying to move the group to trading stocks that are over $250 a share. And I'll tell you what, you know, I say this all the time, especially if you're an options trader, right? Because when the shares go from 250 to 275, that is a 10%, that's a 10% increase in the value of the stock, right?
Yes.
But man, if you had a Delta 80 Leaps option on a stock that went $25, you're celebrating, right?
Yes. With that concept of the 10% move, I feel like it's that balance of like, I'm middle class and I want to buy something affordable. But if you don't think about this idea of a 10% move, a 10% move on a $70 stock is $7.
Yes.
A 10% move on a $250 stock is $25. And once you start to get into option trading, like that is enormous. It's a magnitude of difference. It's just insane.
Correct. And so the thing that still gets me as a stock market trader and teacher is the $25 increase in the $250 stock, and you own, let's say, 10 contracts of a Delta 80, that's the result that a penny stock trader dreams of. Do you know what I'm saying?
Right, exactly.
Right.
Yes. The thing that you're on the hunt for in that penny stock is like right there for you, practically guaranteed in the $250 stock.
That is correct. And if you have the right financial education, you can get these extraordinary results. Not that we're always trying to hit home runs, but you get these extraordinary results because you have the right tools in your toolkit and the right perception about that stock trading at $250. And it only made it over $100 a share because of all that institutional involvement. And I think if more people really understood that, you want to swim with the sharks, not in some little pond on your own, which is like what penny stocks are like.
And also what's interesting to me, Tyrone, that just fascinates me is that they go, well, I'm willing to wait. Because this 10% move we're talking on a $250 stock, like that might not happen tomorrow.
Correct.
Maybe it happens from one quarter, like quarter to quarter. But that's still only 3 months. You're waiting for your $10 stock to get to $100. Like you're like, well, I'm willing to wait. I'll sit in it for 2 years. I'm like, 2 years? I'm talking about 3 months.
Right. In between earnings.
Right. You know, I'm like, you're not, like, if you're willing to be patient for this enormous period of time on this one little stock, like just add just a hair of that patience over here. But I feel like there's like this psychology of like, well, if it doesn't pop immediately on the high end, then it didn't work. And I'm like, no, we're not talking about fast money. We're not talking about this is happening every 2 days. But even if it's happening once every 3 months, like that's incredible for your portfolio.
It really is incredible. It really is incredible. And so I guess that takes you back to the idea of being patient quarter to quarter or Q to Q, as we say.
Yes.
Yeah.
Yes.
Yeah. Because the payoff is just so, hey, listen, forget a 10% move, a 5% move with 10 contracts of a Delta 80. You're still queen of the world, right?
Yes.
Yeah.
Yes.
So this is the thing that I think is also interesting, right? Once you kind of hit a flow with your trading, profits come not only predictably, but rather easily. Have you found that?
Absolutely.
Okay.
Yes.
So here's what I do, and even though I'm a teacher and a trader and all that, I am constantly giving myself exercises to be better and greater and use leverage in a greater and better way. In other words, go back into my toolkit and work with, tools that I don't use very often. I like the challenge of that. So I am always a work in progress, getting better, right? Because my hope is that I never master stock market trading. I don't ever want to. I always want to be in process. So is there anything that you're in process on right now to tighten up your skills?
Oh, for me, it's really, I think for me, it's the leaps that I'm really focused on, because the most specific thing for me with leaps is like understanding why you're purchasing that particular leap. Is this a Delta 80 you're holding Q to Q and it's patient and you're waiting for conversion? Is this a Delta 50 that you are trading? And really remembering like, okay, for this stock, allocating my money and my capital and like what stock is the right play for each given leap, and how much money and how much I can cover, making sure that all of it's covered by covered call premium, so that I definitely have had times where I wasn't as covered in a leap as I should have been, and that felt very uncomfortable for me. So it's really so for me, I guess it's like allocation and leaps, but really, really, really allocation of capital. Because even when you're talking about setting up spreads, like the allocation of your capital is so important, to be clear about where your money is going, how it's bringing in market money, and what you're doing with that market money to hedge your account overall.
And that's where we get into skill sets that most professional traders don't have, right? Because when you start trading, when you start trading leaps, spreads, and covered calls, and you're doing capital management, like making sure you don't lose all the money in the leaps, you hedge that off, you really have to be thinking multi-dimensionally, right? Whereas when you're selling a covered call, you sell the covered call, you leave the room, T+1, the money's there, you wait for your 2 to 3 months, but the money is faster, the better you're able to think through your more sophisticated trades. Does that make sense?
Yes.
Yeah.
100%.
I mean, I think you discovered that this week with there's a whole new advanced thing that I'm doing right now. And you see how that structure that you and I talked about earlier this week, it's really fruitful, right?
Yes.
But you have to check off everything in the box to make sure that the structure of the trade is hedged off so you don't lose money.
Yes, and to really sit and think it out and do the math and write it down and reason it out, and then make sure once you've reasoned it out that you then actually execute all the trades properly. And just, it does take more like focus and attention, but it is so worth it. And to be able to like not have your capital tied up. I think that was the hardest thing for me, is that earlier on, it was more safe. It felt safer to me to have the shares in a covered call because I was already covered. And the idea of like having an option sitting out there that like I would have to only cover if it rose or whatever. I'd be like, oh my God, but it's not covered yet. And what if I have to cover? And the anxiety of like having it sort of not covered and only getting triggered into it, used to make me crazy. But now I feel so much more comfortable being like, oh, okay, no problem. And if that happens, then I get triggered in and it's okay. And then that means this over here. And then that means that over there. And really understanding the whole system is what has made me more comfortable with each individual part.
And this advanced new trading approach that I've passed on to you, you see how it's lower risk than owning
Yes.
all of those shares, right?
Yes.
Yes.
Oh my gosh.
So I love it. I'm trying to figure out who to teach it to at what point, so on and so forth. But I love it because you don't initially have to have a whole lot of money in the market. You have a little bit more in leverage. But if you hedge that off, you won't lose that money. But if the stock starts to run, oh my God. I mean, it's unreal how much you can actually make. So some people can't believe that you can earn, $7,000. Well, if we're in and out of the trade twice, it's a $15,000 week. And I know that is a lot for a lot of people, but you see how that is real, right?
Yes,
Right.
yes. And what's amazing is once you cover it the first time, it's already covered and you can just keep resetting it.
And as long as you're following the rules, you're essentially resetting the same setup,
Exactly.
but more with leverage and less with shares.
Exactly. And I love that it is disciplined. It's like, I don't go off and buy way more shares and way more leaps and way more. I was like, no. This is how much I have covered. So this is how my hedge works. And that means that I have this amount of leaps that I'm allowed to purchase. And if I bring in more cover call income elsewhere in my account and I can cover more, then I'm allowed to cover more. So there is also something built into the discipline that keeps you from getting greedy and overextending yourself, even as you're getting excited about all the money you're making so fast.
Correct. And what I have discovered as a teacher last year, because you were there in Maui. We were all there in Maui together.
Yes.
Right, last year.
Yes.
So I have found that people tend to absorb information, especially when it comes to something like stock market trading, totally and completely when we all go away from our homes. Right. And that's what made Maui so magical for me, was that I had everyone's attention. I don't just mean because I'm the guy on stage, but I mean, I had everyone's attention. There was nothing you could be distracted about because you were just going to go back to your 5-star hotel room while I'm teaching you how to make all this fantastic money. So
Are you kidding me? We go sit at the pool and talk about it for another 4 hours.
that was the other part that was really great. And it was really great because people came from all over the country, all over the world, and it was really wonderful. So this new system that I've introduced you to, I thought we were going to do this year in Maui, but unfortunately, circumstances are out of our control. There is no this year. But next year, hopefully I can introduce it to more people in a setting that allows them to absorb the material.
Yes.
Because I don't expect everybody to become a master options trader, but we're sure going to give it a shot.
Yeah, and there's something so great about being able to talk about it because you take in the information. I always find that I take in the information, I understand the theory, I'm like, I got this. And then you set up the trade, and then as you're setting it up, you realize that you have a couple of like little tiny, more nuanced questions, and then you resolve the trade, and then you're like, oh, now I got it. Yep, got it.
Yes.
And then now you're off and running. And it's so great to have an environment where you're able to like talk it out with people and other people's questions you maybe didn't realize you had. And then, or they ask you a question, then you answer it. You're like, oh, I didn't know I knew that. And it's so great when you have that community aspect where you're all just like focusing on that. Nobody's like running off to go pick up their kids or whatever. We're all just still talking about it and processing how this information is affecting our lives, because every time my earning potential increases, I also then have to grow my psychology to accept that.
Very nicely said. So, Carrie, you use every tool in your toolkit. You don't buy penny stocks for reasons we've discussed during this interview. There's someone who's made it to the end of the show, and they're going, yeah, Tyrone seems like a nice guy, and this woman sounds great, but I'm not 100% sure I could do this. And to that person, you would say what?
You absolutely can. You literally just have to decide that you want to, and you can do it.
And that's it?
That's literally it, because once you make the choice, once you decide, I want this education, this is something I want in my life, I'm going to invest in myself and invest in this education, and you start, then it's so simple and it's going to unfold. I mean, obviously it's going to be a learning curve and time will sort of develop you. But once you decide, once you say, you know what, yes, this is for me. I want this in my life. I've decided I want to change. I am ready for it. and I'm going to do it. And you just start, it already starts working.
Wow. Well, I could not have said that better myself, my friend. Hey, listen, I thank you so much for your generosity with your time. I know you have to actually go direct something now, right?
Yes.
Okay. So thank you so much for coming on Trading Stocks Made Easy. I don't know, for the 4th time or whatever it is.
My pleasure.
We're going to have you back when your income doubles.
Oh, yes. Let's do it. I can't wait. That'll be, 10 months from now?
Right. And we'll celebrate. We'll celebrate that and share it with the audience, okay?
Of course.
All right. Thank you so much, Carrie, for being here. I really do appreciate it.
Thank you.
And I'll be back right after this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hey, listen, I hope you enjoyed today's episode of Trading Stocks Made Easy. Even if you don't understand everything we talked about in this particular episode, just know that $15,000 or more is possible and can be yours with the what? Right mindset and the right financial education. Hey, it's Tyrone Jackson, the wealthy investor, saying I'll see you right here on the next episode of Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.